news. Like us on Facebook for updates on new Blue Raider gear and special prices or discounts. For all your Blue Raider gear, shop Raider Tees today. Bigger, better, and go blue!
This segment has been sponsored by the local Edward Jones office of Lee Colvin. The host of this show and Edward Jones have an existing business relationship. This event is not a testimonial of the services provided by Edward Jones financial advisor Lee Colvin.
Rutherford Issues with Brian Barrett on FM 101.9 and AM 1450 Murfreesboro, FM 100.5 Smyrna. Listen and watch at WGNSradio.com.
Rutherford Issues is powered by Middle Tennessee Electric. MTE's Sharing Change has now donated more than $11 million to local nonprofits assisting worthy causes in our community. MTE serving to make life better since 1936. Today, our pal, Edward Jones financial advisor Lee Colvin joins us, and we're going to be talking about how to respond to the market cycles. It's definitely been a roller coaster lately. Mr. Colvin, good morning, sir.
Hey, Brian. How you doing today, buddy?
Doing good. Hope you're enjoying all this nice rain we're getting in July. It's kind of a rarity in this time of the year, isn't it?
Yeah, I was going to tell you, from within one of the tallest buildings in Murfreesboro, I definitely can see through the weather window that it is overcast and drizzly today.
Yeah. You've got a big weather window today, so.
I do.
Oh, goodness. So these market cycles, movement in the markets has been, well, I guess always kind of seems mysterious, but yet you've taught me, and you can look back over long periods and see patterns and things of that nature and just how to respond. So I guess the question, as an investor, how should you respond to market cycles? So that's what we're going to explore today, right?
Definitely, Brian. And the thing about it is, as mysterious as these markets look, just know that the further we look back in history and we track the patterns, the more consistently they repeat themselves. So don't get overly worried. Don't get scared. You want to be abreast of what's going on. You want to know what's happening. But just know that these are normal and we can help you through them. So with that, we wanted to begin today with understanding that it's useful to know something about the nature of a market cycle and its connection to the business or economic cycles that we see, which describe the fluctuation of the economy between periods of growth in our economy here and contraction within our economy here.
So what are some of the issues that we should look at or maybe kind of indicate those fluctuations or that, maybe that contraction or expansion?
Definitely the major issues that we typically see are going to be employment, consumer spending, interest rates, and inflation. All of these can determine the stage of the business cycle that we're actually in, Brian.
But I guess also, when you talk about the markets, you're talking about financial markets, and you've got the whole market as a whole, but then you've got individual items within that. I mean, what I'm getting to here, I guess, is that, they can perform differently within the same market, if you will. Does that make sense?
You're exactly right. Even though everything is within the same market, there are different types of investments. Therefore, different investments react differently in each market cycle, right, or each part of the cycle. So the market cycle, it often anticipates the business cycle. In other words, the stock market may peak or hit bottom before the business cycle does the same. And that's partially because the financial markets are always looking ahead. So if they foresee an event that could boost the business cycle and help the economy, such as the Federal Reserve lowering interest rates, then they may become more bullish on stocks, thus driving the market up. Conversely, if the markets think that the business cycle will slow down and the economy will contract, then they may project a decline in corporate earnings and become more bearish on stocks, leading to a market drop.
I see what you did there, bull, bear. So,
Right.
Lee Colvin is with us, talking about how we should respond to the market cycles. And I guess, Lee, once you're familiar with the nature of the markets, I guess you wouldn't really be surprised when they occur, right?
Correct. But does that mean that you should base your investment strategy on those cycles, Brian? And that's one of those major questions. And some people do, right? People get in the mode of, or let me say they believe this market cycle is moving through a downward phase. They may try to cut their perceived losses by selling stocks, even those with strong fundamentals and good prospects, and buying lower risk investments. While these safer investments may offer more price stability and a greater degree of preservation of principal, they also won't provide much in the way of growth potential. And you'll need this growth capacity to help reach your long-term goals, including a comfortable retirement.
Lee, when investors think the market cycle is moving upward, might they keep investing in those stocks?
Yeah, and understand that many times when the market cycle is moving upward, while they may keep investing in those stocks, even though they become overpriced, in extreme cases, Brian, unwarranted investor enthusiasm can actually lead to events such as the dot-com bubble, which led to a sharp market decline from 2000 through 2002.
So this is kind of like, I guess maybe the term that comes to mind is timing the market. There's another way to look at it too, right? Other than just timing the market.
That's right. Rather than trying to time the market, you may well be better off looking past the cycles and following a long-term all-weather strategy that's appropriate for your goals. Looking at your risk tolerance, looking at your time horizon, looking at your need for liquidity. We don't want to tie all of your money down, but what do you really need to stay liquid? And it's also a good idea to build a diversified portfolio containing U.S. and foreign stocks, mutual funds, corporate bonds, U.S. treasuries, and even other investments. Brian, while diversification cannot protect against all losses, it can actually help protect you from market volatility that might primarily affect just one asset class.
Lee, you watch the news and you see, stocks were up today, or, stocks were down sharply today based off this or that. And, you can kind of get caught up in that volatility. I guess the market cycles do garner a lot of attention, but sometimes that's just noise.
That's right. Those cycles, while they're drawing the attention, and they are relevant to investors in the sense that they can explain what's happening in the market today, when it comes to investing, it's best not to think of cycles, but think of a long-term journey, right?
Mm-hmm.
One that, when traveled carefully, can actually lead folks to destinations that they are actually desiring or are seeking for their ultimate goal.
Well, one of the over the last 15 years that you and I have had these conversations. The word diversified, a diversified portfolio that was mentioned here today. And, you know, I think sometimes people can get mixed messages. And my point is, if there's someone out there listening right now that's saying, you know what, I need to get someone to help look at what we're doing here, a financial advisor to give some advice, I bet you know one.
Brian, we just happen to have the right folks at hand, and we would love the opportunity to receive those calls, receive those visits. You know, with Edward Jones here locally in the county, we have many good advisors who can help. So if folks want to reach out to us, they can stop by our office. We're in the public shopping center on the corner of Rutherford and Broad, or they can give us a call at my office at 615-907-7056. Again, that's 615-907-7056. We can have an initial conversation and review, see what folks' needs are, and from those needs, we can try to fit them with the best financial advisor locally here in the county.
Lee, as always, good talking to you, and we'll catch up here in a few weeks, okay?
Sounds great. Thank you so much, Brian.
All right.
Have a good day.
You too. That is Lee Colvin, Edward Jones financial advisor here on Rutherford Issues today, joining us. And certainly thank him for being here, and thank you for tuning in as well. Hope you have a wonderful day. We'll see you back here next time. Don't forget, if you missed part of our conversation with Lee today, the podcast will be up shortly on WGNSradio.com.
When severe weather strikes, we break in.
A tornado watch is in effect for Rutherford County.
The most up-to-date weather information.
We'll be here with you on radio and with Rutherford Weather video channels as we continue to track this storm. As it
Get 10-point details on severe and impactful weather in Rutherford County with Rutherford Weather.
A severe thunderstorm watch is in effect for Rutherford County.
Listen for Rutherford weather updates on WGNS and watch on YouTube and Facebook by following at RUCO Weather. That's RUCO Weather.
The Garden Patch Thrift Shop on Spring Street.